everyone, I'm Jeovana.
I'm Angelina.
And I'm Meivelyn.
We are from Group 2 and today we are going to share an information about the capital market law. Regarding basic legislation of the capital market in Indonesia, the basic legislation for the capital market in Indonesia is Law Number 8 of 1995 concerning about the capital markets. This law is the main foundation that regulates various aspects related to the capital market in Indonesia, including securities issuance and trading, capital market institution, investor protection, supervision and regulation, and dispute resolution. Apart from Law Number 8 of 1995, there are also derivative regulations such as the Financial Service Authority or OJK regulation, which is the capital market supervisory institution in Indonesia, as well as other regulations that regulate certain aspects of the capital market such as information disclosure, transaction procedures, and investor protection. All these regulations together form the legal framework that regulates and supervises capital market activities in Indonesia.
Next, the objectives of law. The objectives of capital market law in Indonesia are as follows. Point 1. One of the main objectives is to protect investors' interests, including the right of minority investors, by providing adequate legal protection. And point 2, regulate the capital market to ensure transparency in providing information to stakeholders, including investors, about company condition, investment prospects, and related risks. Point 3, encourage efficient capital allocation and equitable distribution of wealth, as well as ensuring fair treatment for all parties involved in the capital market. Point 4, regulate the capital market to develop a quality, liquid and growing capital market and encourage overall economic growth. Point 5, provide important legal certainty in capital market activities so the market players can carry out the transaction with confidence in their rights and obligations in accordance with applicable law. Point 6, direct the capital market to take into account the social and environmental impacts of investment activities, as well as encourage socially and environmentally responsible business practice. By fulfilling the objectives, the capital market law in Indonesia aims to create a safe, efficient, and sustainable investment environment for all parties involved.
Next, we will talk about the legal basis. The legal principle of the capital market in Indonesia include the principle of the openness or transparency. The capital market is regulated to ensure the disclosure of information of stakeholders, including investors, regarding company conditions, investment prospects, and related risks. Next is principle of investor protection. Protection of investor interests is the main principle in every capital market policy and regulation, including the protection of the rights of minority investors, principle of efficiency and equity. The capital market is directed at creating efficiency in capital allocation and equal distribution of wealth, as well as ensuring fair treatment for all parties involved in the capital market. Next, principle of market development. Capital market regulations aim to develop a quality, liquid and growing capital market, as well as encouraging overall economic growth. Principle of legal certainty. Legal certainty is an important prerequisite in capital market activities, so that market players can carry out transactions with confidence in their rights and obligations in accordance with applicable law. Next, principle of social and environmental responsibility. The capital market is directed to take into account the social and environmental impacts of investment activities, as well as encouraging socially and environmentally responsible business practices. These principles are the basis for forming capital market regulations, policies, and practices in Indonesia to create a safe, efficient, and sustainable investment environment. Next is the basic highlight of the capital market law. The capital market law in Indonesia regulates the structure and function of the capital market, including securities issuance, syariah capital markets, and the role of the Financial Service Authority or OJK. The main focus is investor protection through transparency, information disclosure and law enforcement,
This law established sanctions for violators and encourages capital market education. This aims to create a safe, transparent, and efficient investment environment, as well as promote quality and sustainable capital market growth for national economic development.
Next, we will talk about the legal principle of Law Number 8 of 1995 is about to protect the stockholders from defraud. The capital markets law in Indonesia stipulates several prohibited actions, including buying or selling securities based on confidential information that is not available to the public, thereby giving insiders an unfair advantage. Next, controlling or manipulating market price by twisting or manipulating information or transactions. Providing false or fraudulent information that can influence someone's investment decision in the capital market. Failure to convey correct, clear, and complete information to shareholders or the public in accordance with legal provisions. Next, using company funds for personal interest without valid permissions or violating applicable legal principles. Next, violating the provisions governing the offering of public securities to the public. Failure to fulfill obligations stipulated in laws or regulations regarding ownerships and use of shares. And the last, violating obligation or provisions regulated by the Financial Service Authority related to capital market regulation and supervision. These actions are considered to violate the capital market law and may be subject to sanction in accordance with applicable provisions.
Next, the issue under the provisions of law. It contains definitions, understandings, and rules and regulations on activity in the capital market. It contains about Chapter 5 Securities Companies, Security Company Representative, and Investment Advisors. Next, Chapter 6 Capital Market Supporting Institutions. And Chapter 7 Collective Custody and the Settlement of Exchange Transactions.
Next is administrative sanction for the capital market law. Bapepam may impose administrative sanction for violation of this law and or its implementing regulation against every person that is licensed, approved, or registered with Bapepam. Persons to refer to this article are issuers, public companies, securities exchange, and many more. The administrative sanction referred to an item may consist of written admonitions, fines, restriction on business activity, suspension of business activity, revocation of business license, cancellation of approvals, and cancellation of registration.
Next, we will talk about the legal liability. The legal liability of capital market law is based on this penalty. A business activity that does not obtain a business permit, approval, and registration from Bapepam will be threatened with imprisonment for a maximum 5 years and a fine of maximum of 5 billion rupiah as intended in Article 6, 13, 18, 30, 34, 43, 48, 50, and 64. Any party who does not pass the examination carried out by Bapepam will be threatened with imprisonment for 1 year and a maximum fine of 1 billion rupiah. Investment manager or affiliated parties which violates the provisions as intended in Article 42 is threatened with imprisonment, a maximum of 1 year and a maximum fine of 1 billion rupiah. Any party who violates the provisions of a public offering from Bapepam to the public will be threatened with imprisonment for a maximum of 10 years and a fine of a maximum 15 billion rupiah as regulated in Article 70.
So, this is the case of capital market law. In March 1997, Beni Cokro Saputro, through PT Multi Initiative Investama Securities, orchestrated a significant share transaction involving PT Bank Pico Tbk, which elevated Beni's total shareholding to 4,500,000 shares. This move marked
a pivotal moment in Benny's investment portfolio, as it solidified his substantial stake in the company and positioned him as a notable player within the banking sector. Such strategic maneuvers underscore the dynamic nature of the financial markets and the astuteness required to navigate them successfully. The transaction was carried out using 13 other parties' names. In April 1997, PT Bank Pico stock trading became very active and stock price increased by 20%. Pendi Chandra, Director of PT Multi Initiative Investama Securities, controlled by Benny, actively transactions Bank Pico shares through PT Putra Sarasai Parsada Securities or PSP Securities. At Pendi Chandra request, PSP Securities split the buy and sell order of Pico Bank shares through the Speculant Effect Company, which at that time predicted that the share of price of Pico Bank would fall and then carry out a sale transaction of Pico Bank share even though it did not have those shares in the hope that of the stock price would fall. As a result, 52 of the 127 securities companies failed to hand over the shares of Pico Bank. And at that time, Bapepam only sanctioned the return of profits from PT Bank Pico transactions 1 billion rupiah to the state.
Hi Meivelyn.
Hi.
Can you explain to us what is capital market?
Okay, a capital market is a financial market in which long-term debt or equity-backed securities are traded. Capital markets channel the wealth of savers to those who can put it to long-term productive use, such as companies or governments making long-term investments. It is a market for securities where companies and governments can raise long-term funds.
Gio,
Yeah.
companies have 4 methods that are used to raise funds in the capital market. Can you explain to us?
Okay. So the 4 methods that are used to raise funds in the capital market are equity shares. That the company wants to raise funds. It means they have an excellent option to get the funds. Equity shares are a suitable option available for the companies. Second is bonds. A bond is an amount of money that has to be given at a maturity date or when they redeem the bonds. Bondholders receive a regular interest payment at predetermined interest rates. Third one is preference shares. The company chooses this to raise capital. If a company has financial trouble, the buyers of shares get special status. Last one is the debentures companies use to raise medium-term or long-term capital by getting the debt capital from investor or public. That's it.
Hi Angelina, can you tell us what is the required to be successful in capital market?
Yes, of course. I trust that a person requires more than qualifications to work in the stock market or capital market. Degrees are required because you must be qualified as grasp finance and the stock market operational activities. However, a person must be well known in the stock market and have access to the most recent updates. To perfect the functions of financial consultant or advisor, they must also have strong communication, negotiation abilities. Furthermore, making informed decisions about the stock market's future and the risks and rewards of the investment is critical.
Hi guys! That's all the video that we can share the information about the capital market law.
Hope that this video will give you guys more information about the capital market law.
And hope the information will be useful for you guys.
Okay, bye!
In the capital market, failure to confirm correct
Admoni.
Sorry,